Hi, I'm Scott Starratt with Starratt Wealth Management, a part of Canaccord Genuity Wealth Management. So September was another strong month for most equity and bond markets as we continued to see the benefits of a strong U.S. economy, although slightly weakening, and the continued generation of a lot of revenue on the AI space. So just a little bit of a cautious tale for right now. And it's starting a lot of the people that have been around for quite some time, and I'm speaking primarily of a fellow by the name of David Solomon. So David Solomon's the current CEO of Goldman Sachs. And I would argue that he probably among another probably 20 or 30 people in the world have the most visibility into what's going on in markets throughout the world. And one of the things he's been cautioning on is the idea that although I would be hesitant to call this a bubble, he says, we're in a situation where the equity markets are definitely betting that AI is going to be a game-changing kind of industrial revolution as such. And although that's probably the case, he says, we have to put it in context that a lot of times the pendulum swings very far in one direction. And at this point, you're having a lot of capital creation, you're having a lot of valuation increases, very similar to what happened in the late 90s, early thousands. If you recall then, for a lot of people, that was a time when not only was the internet exploding, but you also had broadband exploding. And broadband internet, which now today we just consider normal, back then, we actually still had dial-up for most internet. And so with these companies and like WorldCom and TELUS and Shaw in Canada, they ended up building out primarily using debt a lot of different kind of capacity when it comes to broadband. And what ended up happening is although that broadband usage definitely increased over the next 5 to 10 years, initially they overbuilt, and that caused a big disconnect between what happened in the real world with profits and the money that was being plowed into the broadband build out. And so you ended up seeing, the dot-com bubble. And so what David Solomon essentially is saying now is that he's not calling this a bubble because he doesn't know, and he would argue nobody knows. But what he says that I found interesting was that when investors get excited like they are right now, they tend to think about the good things that can go right. They're very, very positive. But what it means psychologically is we tend to diminish things that you're skeptical about or things that could go wrong. And we're definitely starting to see that right now. So we've been cautious for a bit. And I would say that at this point, we're still quite comfortable with allocations and where everything's sitting. But there may come a point, and I've spoken about this a few months ago, where you end up having a market melt up. We're all familiar with kind of a market meltdown when the stock market crashes. But a melt up would occur the opposite, where things get very, very excessively priced. And I'm not saying we're there yet, and I mean, in hindsight, it's the only way we're going to know. But I think it comes to a point where at some point where we could have that market melt up, at which point we would continue to become even more conservative. But as it stands right now, obviously enjoying the positive markets, but just a little bit more cautious and getting more and more cautious as we go through month after month of really positive outperformance as it applies to a lot of our equity managers. Other than that, September was a pretty quiet month for a lot of activity. There wasn't a lot of drama, which is, again, unlike a lot of Septembers. You tend to have really August, September, October as some of historically the worst months of the year. But like I said, we're on the way to another positive month in October. So we'll see what happens. But caution is definitely at the forefront of our minds right now. In another month or so, we'll start our year-end process where we look at capital gains, or there probably not a lot of losses this year, but capital gains, and seeing if we can protect against paying too much tax come next April, and obviously reaching out to all of you before the end of the year to talk about that, even over and above our regular reviews that we have. That's about all for now. Obviously, Jim, Mark, sorry, Freudian slip. Jim, myself, Alex and Angela are more than happy to chat if you do have any questions. But other than that, we'll be talking to you soon. And as I often say, we do have a few extra spots available on our client roster. So if you do know of any family or friends that maybe are looking at a change or a second opinion on their investments or their financial planning, please do let us know. We'd be more than happy to chat with them.